Hey, it's JMcAlister here with Cornerstone Home Lending. Hey, last time we talked, we were discussing some myths in the mortgage industry. We talked about 4 of them. If you didn't get that video, let me know. I'm happy to resend it. But we're going to go ahead and finish up with the next 4. So myth number 5, 30-year fixed rate mortgage is always the best loan. Maybe it is, maybe it isn't. We like to look at everyone's situation individually and do a total cost analysis to compare a 30-year fixed to maybe a shorter time period, to maybe even an adjustable rate mortgage, and figure out what is the best loan for you in particular. 30-year fixed rate loans happen to be the most popular right now with where interest rates are, but we want to do a side-by-side comparison to make sure it's the best one for you. Myth number 6, you should spend the maximum amount you qualify for. I really struggle with this one. In fact, a lot of clients will come up to me and say, hey, what do I qualify as far as a loan goes? My next question generally is, what are you comfortable paying? Because even in today's market, there's a really good chance I can get you approved for higher than maybe you're comfortable paying. So instead of doing what you can do, we like to look at what you should do, and then we back into what that purchase price should look like. Myth number 7, refinancing a mortgage isn't worth the hassle. Now this one could be true if you like throwing away money. But if you don't like to throw away money, then looking at a refinance could save you some cash, and something we want to look into for you. Just because interest rates have ticked up a little bit doesn't mean that a refinance doesn't make sense. We'll do a total cost analysis, look at it side by side, see if it makes sense. We just did one last week where we dropped mortgage insurance for someone, saved them $242 a month. So interest rate went up, payment went down. Myth number 8, you cannot pay off your mortgage without a prepayment penalty. There was a time where that may be the case. If you've done a loan since the mid-2000s during the mortgage crisis, chances are you don't have a prepayment penalty. So you can pay off that loan early without any penalty. It'll show up in your documents that you signed at closing, whether you do or don't. I would be willing to bet most likely if you've done a loan in the last 10 to 15 years, you don't. So you can pay that off with no penalty. If you have any questions on any of these myths, I'm happy to help out. Please let me know, and I'll talk to you soon. Bye-bye.